Hello, this is Doc for the ReadySetCrypto OMNIA newsletter market update for Sunday, the 8th of March. I thought I'd start off today's video with a little bit of a reading off the North Star. So what I'm doing here is putting up the monthly chart of, we'll start off with the S&P 500, and I've got it on the log scale. So you can see how this starts out slowly and then accelerates into higher and higher figures. Now, the reason why we do something like this is because if we go to a linear scale, it just doesn't make sense. Then we lose all the detail back here. And this is frankly what people are getting wrong in today's market. If you put on the news of any financial stock media today, what you're going to see is a little corner of the screen taken up by, first of all, the Dow Jones Industrials, which is ridiculous since it only represents 30 stocks and just big blue chips and not the entire market. The S&P is a much better reading on the entire health of the market. But also the fact that with this inflation that we've seen, and yes, we have had inflation in assets over the last 10 years, all that money that they were printing and all that quantitative easing went somewhere, and it was not into goods. It was not into consumers' pockets. It went directly into assets like stocks and other investments. Now, the whole idea why central banks did this was to create what's called the wealth effect. If the markets are going up, then people say, hey, the markets are going up, everything's good, and then people spend money, and then this creates the consumer inflation. But the problem is that only the investor class really took advantage of that. And this is one of the many, many, many reasons why we have such disparity right now, because money has gone into, it's kind of like a big vacuum, right? It always is going to go to places where it's going to create yield and not necessarily where people think it should go. And this is one of the reasons why you see me rail on academics and government bodies that think they know better because they're reading something out of a textbook. But this is just not the way that animal spirits operate. Money will always find, it's kind of like water, will always flow downhill, right? A vacuum will always pull in things to it. It's just forces of nature that occur all the time. So this is why we're looking at log charts, because log charts will normalize the percentage gains. And you can see how over time what has happened. And this is fascinating for me because over time what's happened is we've had these corrections where we have extremely volatile sideways markets, and then we get a big break. And then we have another correction, sideways markets, and then we get a big break. And then another correction, and this one broke most recently about 2013. And we've been in the middle of this big long run since that point. And now you can see this little tiny movement up at the very top here. And that represents what everybody is screaming about because we've lost 15% of the value of the S&P 500. So that should tell you a couple of things. First of all, number one, that it's barely moved, but conversely, by the same token, the concern is that it's just barely moved. And you can see the potential for something like this when we do run into severe corrective moves. This was like the 1987 crash. Here was the bear market from 2000 to 2003. Here was the financial crisis that we had in 08 and into early 09. And since then, we've had these little excitable moments. Here was 2018, things like that. And this is just another one of them. So what separates this from the rest of these crises that have occurred over the years? What separates this from turning into a true, serious vertical bear market? Well, a couple of things, really, just from a structure perspective. Now, anything can happen in these markets, and sometimes anything does happen. But let me show you through a couple of these most recent ones. Each one of these represented some strong selling at the beginning. But then what happened was the strongest selling always occurs at the very end of a bear. The strongest selling always occurs at the very end of a bear when people give up hope. The strongest selling, even this was a technical bear market because it was 20%, but it didn't feature this, which is the lower high. The lower monthly high to me really represents kind of the departure point between, hey, this is scary versus, hey, this is really getting serious. And right now we are in the, hey, this is scary bit. And what I want to see before I'm anticipating any kind of a true bear market, a true vertical bear market, is the price ramping higher first and then setting up a monthly lower high. And that's so necessary because you've got to get price movement to the downside. It's just like what I've been saying all the time with the upside. To get movement to the downside, you've got to have price go higher first, because what that does is that loads up the ledger in one direction. It loads up the ledger with weak hand bulls that get the rug pulled out from underneath them. And this happens again and again and again. And then finally, you get the mass capitulation at the bottom. So that's a way of me saying that we're just getting started with this. We don't know whether or not this is going to turn into a massive bear in time, or whether this is just going to turn into something that we're going to look back on someday and say, wow, that was exciting. We truly did overreact to that. Again, I don't know. And I'm not projecting forward one way or the other because I don't think it makes sense right now. I think what we have to do is live in the moment, trade in the moment, stick with what we see in front of us, and stop this projection of what's going to happen 3 months from now, 6 months from now, things like that, because you just don't know. And if there is anybody that's reading studies and technicals and projecting what we're going to be doing forward based on them, then they are using those projections based on past information. And right off the bat, that's invalid. So all technical analysis is going to do for you in cases like that is give you a probability based on what something has done in the past, just more of a probability based on what it will do in the future. But when we get into situations like this, you really don't know. And I've lived through so many of these things. You know, for the past 20 years, I've been through dozens of these things where it's like you feel like it's the end of the world. And only once in a while truly does it act like that. Even some of these were really nasty little moves, but ultimately got popped higher. Now, one of the reasons why things are popping higher, this is part 2, is the bond yields. And let's stay on the log chart and let's show just truly how savage this move is right now. This is a scary move. And this is something that I talked about months ago, saying, if we break through these lows, this is going to be some serious stuff. If we break through these lows, this is going to be serious, and the market's not going to know how to handle this because it means that we have total uncertainty on our hands. And this is what we have right now. So I'm recording this a little after noon my time, and we have another 6 hours to go before the U.S. futures markets open up, which again is another one of those things that I think is outdated and ridiculous and will change at some point because we have 24-hour digital cryptocurrency markets open, and eventually those will overcome those because you just can't take 2 days of the week off anymore. It's just that type of world now where 24-hour risk mitigation is going to be necessary. And right now the crypto markets handle that. And we'll get to that in just a second here in terms of what the crypto markets are showing us. But this is the yields going, right now of the 10-year note, and they're below 1%. This is huge. So what's happening is we're getting this sort of, we'll flip it around and look at the actual bonds, and we're getting just an absolute rip to the upside on the bonds right now. So this is this perceived safe harbor right now. But the problem is you're not getting any yield on them. You're getting appreciation of the asset, but no yield. And that's the whole reason to go into bonds. So we all know that markets that go like this will collapse in a heap on the other side. Does that mean that rates are going to start to rise? I don't know. Right now, the yield curve is showing something like this going forward, that we've got for the next few years, it's going to be sub 1%. That's what it's telling us before we get into, some of the longer term yields, past 10 years. And guess what? This is all based on uncertainty, and it's all based on the reporting of the virus. And what's different about this one is that all of a sudden, not only do you have news agencies reporting on it, fighting for attention, doing what they can to, I won't say overstate the case, but they're doing what they can to get attention, because all of their ratings based on attention, clicks is based on attention, their ad revenues are based on attention. They're doing everything they can right now to scream and yell from the top of the mountain and get people to pay attention to them. And then you've got the Twitter mob out there, which is reporting on things and amplifying based on what they want to do. And then that works into the political spectrum as well, too, because certain people are trying to amplify things to make one party look bad and the other party look good. So you've got people that are confused right now, uncertain, unsettled. When in doubt, palms out, which is the old floor traders way of saying sell. But we're not over yet. What happens when you have no yield on anything else, but you have stocks and you have digital cryptocurrencies, which can provide some form of yield, whether it's appreciation, in some cases you've got dividends, in some cases you've got staking. So this represents a huge opportunity. If there's no yield, if we look back here at the 10-year note, if we have all of this massive amount of cash circulating throughout the system through all of this massive printing programs that we've been doing, and trust me, we've just got started with this. The Fed cut rates by 0.5 point last week, and they're revving up the printing presses as we speak. They're just going to overload the markets with cash trying to prop this thing up. It's the only thing that they can do. So this brings me back to the monthly log chart of the S&P 500. This might be viewed as an opportunity right now. After a 15% haircut, all of this cash has got to go somewhere. And at this point, it can't continue to go into bonds and to press things lower. There is a limit to that. So we may see a flip around into equities, which I think would benefit actually the crypto markets as well. So now let's do this. Let's move over to the crypto markets. Let's start with Bitcoin. And again, this is my North Star for Bitcoin, is this long-term monthly uptrend on the log chart. It looks a little different on the linear chart, but again, the log chart is what we care about because of just some of the percentage of gains that we've had over the years. The other thing to mention about this is that we may see undercuts of this. Right now, the bigger pattern that's in play is a much larger, so you can see this, we have a period of a series of lower highs, lower highs, lower highs all the way along here. And so far we have matching higher lows. Higher low, higher low, higher low. So within this pattern, we could still form this great big triangle that's out. And let's just look at this. We haven't looked at this for a number of months now. And let's see what kind of energy that we have left on this dude. And you can see that now that we're into March, we actually have pretty good energy. This is in the high 40s, which is not fully charged yet, but it's almost there. And this is one of the highest values that we've had since we were in this consolidation, and that level of consolidation and that non-linear action led to a big rally. And so we're at this point now where we might start to anticipate a big move. Now, if we put this together, a drop of 2 months to the row and 2 months in a row to the downside might encourage the shorts to pile on and look for glory down here around the 1,000 level. I mean, that could happen. We could also see this actually undercut and come back down and form some type of a higher low, and it could be below 8,000. So if that happens, I'm going to be okay with it. Again, this is something that you have to go through and just say, what could happen from here? And not get biased based on what somebody is saying and somebody throwing some projections out there based on, well, my read on the MACDs and the RSI says that this is going to happen. Look, anything can happen. And trusting too much on some basic technical indicators is not a sign that you can read the future for this. Again, price will move in a manner which punishes the greatest number of people that are laying bets down for this. This is what the market does. It senses who is most exposed, and the price will move in that direction. So if there's too many bulls, the price will move down. If there's too many bears, they will find them and they will punish them by short covering. The market rewards everybody for what they want out of it. So this is what we're looking at here. We're looking at the market coiling up in a bigger pattern, and this is what's driving everything. And so we tend to get caught up in the day-to-day stuff. We tend to get caught up in the day-to-day movements of what the market is doing. And here we see today, like, it's getting punished, right? It's being shoved out behind. This is just turned into a bear flag movement. Price goes up to go down. Price has to go up to go down, just like the opposite of what I've been saying lately. So now we're going to be finding out pretty soon, and it may be even during the duration of this video here, where the support is going to be. Now, what I've said at length lately is right around 8,000 is a pretty heavy volume profile node, maybe even the point of control. So let's go over and look at that. Let's get rid of our chart studies here for a second. Let's bring up the volume profile that we have. And let's zoom in on that one more time. And let's get as much data as we can on here, because that should give us the best reading for things. Okay, so let's pull this back as much as we can. And you can see this massive node. So really, over the last year, and this is really about what we care about, over the last year, you can see how important that is. That is the point of control. That is the balance point for this market over the last year, is coming down to about 7,900, 8,000. And so it's not a surprise that the price is approaching that from the upper reaches. Lower highs, lower lows, okay? The other thing too is that this is a daily downtrend, which means it's a weekly pullback. If we go out to the weekly chart, we can see that this is just a pullback. And we said before that we need a pullback. As the price was up here, I said, I hope this doesn't go too far, because it will collapse in a heap. But if it goes just far enough to start pulling back, we need to form a higher low. Now, that's the hope, is that we do form a higher low there. We want to form a higher low here, and hopefully it doesn't have to go all the way down and retest these lows or lower than that. Even if it does, again, you have to account for that. Don't sit here and think that it can't happen because there's a fib line in the way, or there's a volume profile line in the way. So speaking of that, let's go out to our fibs. Let's get rid of this. Let's go back to the daily chart. And again, let's put the entire swing on here, and let's see if we have anything that lines up. So I'm going to go all the way back to the very beginning of the swing, which was in the middle of December. Just when things looked the darkest, that's when the rally started. And this is always the way it works. Let's go out to fib retracements. Let's start this one down here, take it all the way to the top. And what do we have? We have that 8,000 level. Look how beautiful this is. The 8,000 level lines up with a 61.8% fib retracement, lines up with several pivots. It's a nice test. Let's give it the benefit of the doubt to 8,000. If it breaks below 8,000, then we are heading lower. We're going to be heading down to maybe the lows down here at 6,500 or so. Again, you've got to look at movement as an opportunity. If you're a trader, look at it as an opportunity. Can you make money to the downside? Can you make money to the upside? So you're not just a one-trick pony. I mean, this is the problem with this market over the past, let's zoom in here. Over the past couple of years, I mean, this has been a trader's market. You've traded it to the upside. It's reversed. It's traded to the downside. It's reversed to the upside, to the downside, to the upside, to the down. You can see how this is just kind of coiling up. Eventually, my larger time frame true north star is going to break to the upside. There's a much higher probability of that happening. So you have to decide of whether you want to sit through that, just ignore it, or find some way to trade to the upside, trade to the downside, find a way to swing trade in an ambidextrous manner. Now, we might be able to have a quick pivot here at a higher low of about 8,000 and watch this thing take off, and then everybody's happy. The hodlers are happy. The swing traders are happy because it's moving. The general bulls are happy. Generally, everybody in crypto is happy. But that's what I'm saying today is find a way to make money regardless of which way the price is going. These days, I would say the easiest way to do that, or the most functional way to do that, is with futures. Certainly, options are an example of a way to do that if you have access to a high-quality broker like Deribit, which I do not anymore, unfortunately. Right now, I'm kind of out in no man's land. There's not much available to those of us in the U.S. right now, other than Deribit, which is kind of illiquid and wide spreads and everything like that. So we're kind of waiting for that to grow up again until we can replace the functionality of Deribit. But if you live in the EU or someplace that does not oppose you from using Deribit, that's certainly one way that you can trade. You can trade futures and options. On Deribit, you can be ambidextrous with that. With futures, though, there's many, many excellent platforms that are around to allow you to trade futures with a small amount of capital. Again, trade in the direction of the anchor chart swing. Look for a signal chart for an entry for that. When you get a move that's this fast, you may not get too many entries on there, right? So look for the 5X chart to make sure that you have enough energy. Trade in the direction of the anchor chart swing. And don't chase the move. Look to get the first available move as the price starts to break. An example filter for something like this would be place trend lines on your anchor chart. And when it breaks that trend line, you're going to be one of the first people on board here at 8,900 chasing after this thing, trying to find an entry up in this area here, instead of everybody else chasing after it and more than likely to get stopped out down here. So again, that's a huge topic. That's something I don't have time for today. So I wanted to get on with you guys today and give you kind of a top-down analysis of what's happening out there in the world. Again, I don't know what's going to happen tonight at 6 o'clock. We could have more fear coming into the market. We could have, this has been the pattern lately, is Sunday night, everybody gets scared to death and opens the futures way down, and more panic pervasive, and and it will hit the crypto markets too if there's more margin calls. Remember, this selling gets worse at the very end of a move. That's where the capitulation occurs, and it will hit downstream to other asset classes such as equities and the cryptocurrency market. So don't be surprised if we have correlation with the equity markets, both to the upside and to the downside, depending on what's happening. Ultimately, I think that the crypto markets will be a good source of yield going forward and a good place in a period of uncertainty and mistrust with the financial system. This is going to be a good place for capital. There's going to be just amazing opportunities, but you have to get used to trading both upside and downside right now. Don't be a one-trick pony. All right, guys, that is it for this weekend's report. Thanks for listening through this long one, and I hope everything works out for you this week. We'll talk to you soon.